This is part 2 of the answers to your questions. We got up a little bit further. I want to make a quick point about the question here, which I might have skipped over actually. I just want to say, well done. You know, this one of us made £6,000 on 12 trades since the retreat. I think maybe even January. But I should have said well done. So I'm just making that point. Otherwise, I think I did answer that question. So we'll now move on to the next question. Right, we got down to question 1. We've dealt with question 1. As you see, I said got to here. So question 2. How do you read the charts? What techniques are available in order for me to spot and trade as the event unfolds? Can you recommend a charting tool that will give me this if we did cover some detail at the seminars. I would encourage you to look again at the DVDs, which if you haven't got them yet, you certainly will have them. So the techniques are Elliott wave theory, price spikes, trend lines, moving averages. I would particularly encourage you to use the trend lines and moving averages. It doesn't take long to, as I showed you, the FTSE was rallying up in a trend channel for almost the last 5 years. That can give you a big edge. If you have those lines in place, you see the market go down to the trend lines. You will see a number of good buying opportunities by just doing that. Add that the Elliott wave theory, the patterns, the 5-wave patterns, the spikes, and all these things should be useful and give you that edge. It is the way you incorporate these various tools, and I would also encourage you to research other tools into your trading that defines your success. Really, it's how you define your focus as a trader. The things that you decide to use. You may find that a number of the techniques I talk about don't suit you, which is why it's so important perhaps to research other techniques. I think every trader goes through this phase where they explore what's available in the marketplace, and perhaps read a few books, look at different techniques. Some people invent their own techniques. There's a whole range of stuff you can do on the market. I would encourage you to do that. I do say in the Bible that research is important. Spending some time each day researching different techniques is a very important part of your trading. Right, question 3. Paper trading has produced some possible strategies. However, I find that the prices tend to be on the high side. I get the impression that I'm in the masses. I get to discover a less popular winning strategy. Could you advise me on some pointers as to how best to think out of the box and come up with a winning strategy? It's quite important. I mean, the best bets are the ones that are contra trend. So when FTSE is up, I'm looking for signals going to go down, and the price of bets when it's going down. That would benefit if it does go down. Similarly, if it is down, I'm looking for signals going to go up, and the bets that would then benefit. For example, today it's 13th of February. The Dow's 100 points up. It looks that we have in fact seen a clear 5 waves up on the Dow. Now the bet Wall Street low to be less than -200 is now 0.2. Okay, so it's now 5:30. We've got to 9 o'clock. We've got 3.5 hours. Could the Dow move 300 points in 2.5 hours? Well, 3.5 hours. Well, certainly it can do. We have got a sell signal. It's possible we're seeing a major peak here. So I think I have bought some of that bet at 2. In fact, I think I paid 3. That's a cheap bet. You can't really say otherwise. I think you need to be looking for reversals on binaries. You need to be looking for signals that tell you something's going to happen, which the betting companies aren't using. They're not pricing in trading signals. Their prices are based purely on the time and the price of the underlying market. There's a volatility factor in there, and weight of money does come into it, although not with the longer term bets, with bets traders and bet on markets. So I hope those comments are useful. Question 4. I find that as I'm not in front of the computer to monitor the trade, there have been instances where I could have made some profit by getting out early instead of staying out on till the close of the market and my profits being reduced. Do you know how I can put an exit limit? Not possible to put an exit limit on the trade with IG. I use a PDA in this situation, so that a PDA is a sophisticated mobile phone. Orange has just issued a really nice PDA called an HTC Touch, I think it's £35 a month. I mean, my previous PDA is quite a thick brick, difficult to carry around the place. This thing is very small, a really good size for a phone. You know, I would quite, if this is a problem, you want prices when you're on the move, then a nice, neat PDA might be the answer. I'll happily help with setting it up, or at least direct you in the right direction for doing that. It's actually quite straightforward. But if you're stuck in meetings, this kind of thing, this is more difficult. I think you have to tailor your trading to your own situation, and that might mean you spend more time looking for bets that have a chance of going all the way, and avoiding bets that have less chance of going all the way. And I appreciate that that's not always simple, it's not always easy, but it is something that's possible. And certainly it's possible to, for example, if we sell a tunnel, I'll often sell tunnels around midday, purely because I expect some action, but not enough to send them all the way down to zero. So that's an example where you wouldn't want to do that. You'd want to wait for a clearer signal, giving you a stronger indication that it's going to go further. Right, we're on to the next set of questions. Question 1. Spikes, failed breaks, retests. If I see a sell spike and wait for 2 TPOs, TPOs are time price opportunities. This is explained in my book, The Way to Trade. It's a market profile term. If I see a sell spike and wait for 2 TPOs, how low are you willing to enter the market short from minus development? How do you decide if you've missed the move or that price is rejected and will continue to move still lower? There's no, again, this is again the personality thing, personalizing your own trading approach. You must decide how many points you want to use. I'm not quite sure what you mean, to be perfectly honest. You see a sell spike and wait for 2 TPOs, how low are you willing to enter? You haven't actually said, okay, it's a sell spike. I mean, personally, I like to use, I think most traders are happy with it, like a 20-point stop. When you see a spike, the good spikes just go all the way. You don't sort of have any real problem with stops. It's the spikes that don't go all the way that are more serious. It depends on what's happening, really. It depends on what you're seeing. If you've got a very strong level, so the spike is above a key level, so say 6,000 on FTSE, for example, and you see the market go to 6,010 and then go to 5,990 at 20-point spike above a key level like that, then that would be a pretty good signal. I might get in a lot quicker. If I'm watching the market as it happens and I see this start to move, it goes to 6,010, I might sell at 6,002, expecting it to go further. But being prepared to bail out pretty quickly if it in fact doesn't go lower. So it is it's very much a personality thing. How do you decide you've missed the move? Well, again, it's up to you. If you've got a 50-point spike, you may decide that that's too much. You may decide 25 points is too much. It is very much a question of your own trading. And I'm sorry to repeat myself, but it is the key point here. One thing you could do, of course, is if you normally trade £10 a point, and you normally use like a 25-point stop, then get going for the 50-point move, but use but halve your position size. I'm not trying to say a great deal more about that, really. You never know whether it'll continue moving lower or not. Generally a spike is an indication that that's what's going to happen, but you never have any certainty about that. Question 2. In your daily lunchtime reports, you state, for example, 28th of January 2008, you see market falling and then maybe bouncing up before the close. It did. How did you come to this conclusion? Okay, let me just check the chart. Statistical is a great shame to shatter illusions. On the 28th, I actually said that I thought it would end lower, which it didn't do, in fact. What I was looking for was a 5-wave decline, really. I was hoping that FTSE would, well, not hoping, I was thinking the FTSE would see 5 waves down, and then that would bounce from the 5-wave low. In the event, we didn't quite do that. We saw an ABC, in fact, and then we saw a bounce. So it was an Elliott wave type pattern, and I did say we might bounce, it might hold in the close, so that did turn out. But I was thinking we'd go lower first, in fact. So if you look at the pattern for that day, you may see what I mean. Actually, I'll just show it. Right, here's the 28th of January. Now what happened here? We had like a 1, 2, and the time of the report we were doing like a 3. So I was expecting something like that, a 5 and then the bounce. Okay, so that's why I was thinking there'd be a bounce. Now in the event, what we saw was, I'll just get rid of all this, we saw a fairly clear A, B, C, so it's a corrective formation, not an impulsive formation, followed by the bounce. So I suppose an interesting point perhaps that very often you do, whatever the wave count is, you can expect the market to bounce. Markets do bounce all the time, which is one of the irritations that they cause us, because if they went in straight lines, things would be perhaps a little bit easier. I mean, you can see the ABC form here, and the fact that we then didn't get a fifth wave counts that as an A, and then we got the B sort of here, and then a C there. So I mean, having got down here, we saw the failed break here. That was the failed break below the prior low. That was a buy signal. So that sort of decent sized move is sort of, if you like, is an opportunity to get into this rally. If you look at these very short term type of action. Okay, that covers question 2. Question 3. On spikes, do you look for it to spike past a significant support resistance area and then trade in the opposite direction? Yeah, that's ideal. I mean, it's not always, but certainly if you have got failed breaks as well as a price spike, then that is better, but not essential. I have this thing called the PDS system I may have mentioned to you in the previous report, where it just is based on the opening action. If we see price move by more than 10 points away from either extreme, although the 10 points is a variable, then you can trade in the direction of the movement. The two TPOs, it's worth mentioning, I mean, the TPOs of time price opportunity. In Steidlmar's original work, we're talking about 30-minute bars. So that's quite a long time, really. Especially if you've got a serious spike. You're going to need, I mean, in an hour, which of course is 2 30-minute bars, you could see a 200-point move on the Dow. So you may want to react a bit more quickly than that. You have to sort of, you have to balance the theory with the practical, the practice. And if you do see a market fail at a key level, you probably want to get in pretty quickly. Really, it's better to get in quickly because you're going to get a better price, whatever it is you're trading. I mean, for example, if you get in 5 points from an extreme, then you can be wrong 4 times out of 5 and make as much money as if you got in 25 points away just the once. And there's no guarantee that having got in 25 points away from the extreme that's going to work either. So I think speed can be quite important here. And coming back to the point about the masses tend not to be very fleet-footed. If you're acting very quickly, you tend to be leaving the masses behind, and that's always a fairly good thing to do. Okay, the second point here, if it breaks up, say 20 points, I think I need a bit more explanation there. I read it 3 times now. Breaks up 20 points, so we've got a low, no significant fail break. Okay, so there's nothing left. Falls back 10 points, followed by 2. I'm not sure what you mean by 2 by 30-minute lower lows. So actually, the spike's been taken out. I think so. The spike's been taken out. It's been negated unless by further spikes. I mean, lower lows. If it's dithering around, then you got what's called a garbage low, which means that they probably won't hold. Right. So question 4: do you apply all your preferred techniques, spikes, to all markets? I do. Yes. They're the techniques I've worked with, and they seem to work on all markets. All markets seem to display the same kind of patterns. As I said on the retreat, I use Elliott in a slightly refined way. I just look for the essential patterns of 5 waves and the ABCs, and all markets do this. I mean, gold, in fact, has just seen the peak, 5-wave peak, which again I'll just refer to the gold market to show you. Okay, gold's quite an interesting pattern actually, so it's an interesting chart pattern to show anyway. We had this triangle develop, so we had the peak there, A, B, C, D, E, so that's a sort of classic 5-wave triangle, 1, 2, 3, 4, 5. We then sort of break up through this parameter, which is the buy signal, so that was a buy signal there. But also, we can count 5 waves. It depends where you go from. I tend to count the triangular bit. Let me just get rid of all this stuff. So we've got 1, 2, 3, 4, 5. We've also got 1, 2, 3, 4, 5. So I think it's probably quite a major peak. I think, and particularly so because so many people are saying so many people are saying gold's going to the moon. You get a lot of people saying the market's going to go even higher, and there's a fair number of them. That's a fairly sure sign it's not. Okay, so that's part of not being one of the matters, I guess. Having said that, there's no real confirmation yet. I mean, we have got this lower high, so there is a sign that we're going to go down, but there aren't really 5 waves here, but very short term. But it looks to me that we may well have peaked. We have got this 5 wave up, so I think there's a possibility we're going to go down there. I may be repeating myself here, as I'm not quite sure when I stop recording. I was so just had a look at gold. So you can see that I do apply these techniques to other markets. I've never traded currencies, in fact, but I'm fairly sure they do work on currencies. It's something I plan to look at, I guess, in the near future, just as a matter of curiosity. Question 5. I still find myself spread betting more than binary betting. Spread betting, the very different mediums, certain types of trade do lend themselves more to a spread bet than a binary bet. And if you're having success or have had success as a spread better, I would encourage you to work with that. I mean, it's if something's working, then I'm a great believer in not fixing it. So that's a key thing, of course. Are you making money? If you're making money on something, then keep doing it. If you're not, then stop doing it, or change what you're doing in that context. So yeah, I do spread bet sometimes. Depends on the situation, really, and it needs to be a decent move. But also I do day trade from time to time. The early action sometimes does tempt me to do something. But yes, I mean it doesn't hurt to have a range of trading vehicles. I do sometimes sell options. So all these things have their place, and it's just a matter of it's part of the research, really. It's part of researching what you're doing and deciding what's right for you. Right, on to this question here. Is there any guidance that you can offer with devising a technique to be able to more quickly identify the best binaries relative to the trading signals given? Not really. It's just a matter of experience. You'll find the ones that you like, that come to hand, as it were. In fact, there aren't really that many. I mean, personally, I prefer the exotics, the high lows, tunnels, one touches. I think these are the nicest bets, but they can be expensive. So sometimes you have to go for the indice bets, the up downs. But I would just give it time, just work with it, and I think you'll find that this slots into place. Please point me in a direction where I can gain a better understanding of what levels of market movement I might see from particular signals. I think we discovered that in my first report when I talked about expiry and Elliott waves. So, I mean, I think Elliott's one of the few techniques which will give you some idea where markets might go in terms of targets. I mean, you get things like head and shoulders, the height of the head is like to be equal to the subsequent move, but they're fairly rare. It's often the case you don't actually really have a clear idea of where the market's going to go. Some traders prefer to go for the longer moves and pay much lower price for the bets. Paying maybe less than 10 for a bet that might go to 100. Other traders prefer to go for the more certain bets, whereby they might pay 30 but will win a lot more often, which again is part of this personality thing, devising the approach that suits you. Please point me in the right direction to be able to expand my knowledge just a little bit more on Elliott wave. Okay, in this question, I mean, basically there's a number of books on Elliott wave. There's a guy called Prechter, which is Prechter, who, if you like, took Elliott wave and became sort of guru, and has marketed it ever since. Now there's a bookshop called Global Investor. If you Google Global Investor and just search Elliott Wave, you'll come up with a number of books. I think practice books are about £25, and it's a good basic introduction. And there are a number of other books that you might enjoy. If anybody would like me to send them an actual link, a URL to a book, then please send me an email and I'll do that. Okay, looks like I did do some spread betting that day, both on the Dow and FTSE, and also some options. I did sell some call options. If you sell a call option, then it will go down in value as the market goes down. So you make a profit if you sell at a higher price and then close at a lower price. But I think yes, I concur that there weren't any particularly attractive binary bets at that time on FTSE. Okay, question 1: how to develop the necessary patience? This again is just a matter of time, really. These things do take time. It's a very exciting business we're in. It's very easy to get overexcited, to rush in, where angels fear to tread, is that the expression? And it does take time. There is a learning curve. I think that just being aware that patience is necessary, and in fact asking the question is a good step in the right direction. And yes, there's this thing that not to miss out is something to stop worrying about, really. I mean, I know it's difficult to stop worrying about it, but the reason people in major market moves buy at the top and sell at the lows is because of this thing that they don't want to miss out. Being dragged in by the market. You want to stop being dragged in by the market, but again, it does take time. I think not waiting for clear enough signals. Yes, again, it makes sense. You need to relax, and you need to stand back and just wait for the right signals. And it does require patience. And it's again, it is just a learning curve. I can't unfortunately say a great deal more about that. I'm not sure about some of the patterns. I can spot 5 ways short term, but find it hard to do so long term. I tend to use daily. In fact, I start with weekly charts and then go on the daily. So I try and get a clearer pattern from the longer term charts, and then move down to the shorter term charts. And I find by doing that, I get a more accurate wave count. But again, it's something that does take time. I've been doing this since 1980s, and you'll develop your own skills, and by doing research, you'll find new areas where you'll excel, which you'll know more than I do about because you'll research them. This is the way to go. But if you want to give me precise, if you want to send me charts, send me a chart that you're having a problem with, then I'll happily give you my comments. My comments may be there's no pattern there. I mean, there aren't always patterns, and I either see one that I like, I see one that falls into place, or I don't trade. I'm not that fussed. There's plenty of markets around. If you want, it doesn't hurt to look at other markets. We have FTSE and the Dow, but there's many other markets we can trade. They haven't, of course, got the same binary bets on them, but it may be worth going to see what there is around. Okay, I like spikes as signals. They seem to work quite often, yes, that's very true. But alas, they tend to come early in the day when I'm driving to work. Also, I frequently miss them when they occur during the day, as I cannot be watching the screen all day long. Yes, I think you've really got to develop, as I said before, your trading around your own circumstances. I mean, certainly the early action is quite important. So if you can rearrange things so that you can be at the marketplace, you can watch the market early on. I mean, for example, if you've got a laptop, you can buy, I think, for £15 from 3, the mobile network, a little dongle thing which plugs in the back of your PC and will allow you to view charts from anywhere, as I understand it. Obviously, it depends where you are driving to work. But say we stop for 5 minutes, you can actually see the opening by doing that, I guess. So, I mean, there are ways of doing these things. I'm not saying they're easy. I mean, I don't know the practicalities involved. But there are certain times when perhaps it's more important to watch than others. The opening is one particular. News items is perhaps another item, another area where you might want to spend want to make time to see the market. But again, it comes down to personalising your approach to fit in with what you want to do. How to maintain rebuild confidence after a series of losses, poor judgments. It is again experience. Losses are part of the business, unfortunately, and you'll find that you get more used to making losses, and of course the profits make a big difference. I think one particularly useful technique is simply to reduce position size. If you're finding it's very tough going, then just knock back the position size, halve it, or even just start trading very small amounts. That's a big help. You go from a stressful situation to a situation where it's just relaxed. You're not too fussed. So that's probably the best thing to do. In fact. Is the best way just to keep notes, review them, looking at the charts, and learn from your mistakes. Well, certainly, very important to learn from your mistakes. The market is, of course, great at random reinforcement. What happens one day does not necessarily happen the next day. In fact, the complete reverse might happen the next day based on a very similar position to start with. But certainly, keeping notes is good. I would recommend keeping notes. I think the more notes you keep, the better. As I've said before, if you write something down, you're forced to be logical. I find that when I think, very often logic flies out the window. When I write it down, I have no choice but to be logical. So that's quite a useful one. Reviewing, yes, of course, review notes. All this work, it makes a lot of sense. It certainly helps. But the biggest thing, I think, when you have this kind of problem is just to reduce position size, so you stop worrying about it. Because fear brings on what it fears. If you're in a situation where you're become fearful of the market, then you're liable to attract losses. Whereas somebody who's very positive of the market is liable to attract profits. This comes back to the report I sent out a few weeks ago now. Okay, any more question about Elliott? Well, yes, I've already covered that point. There's books that it is covered in my own books, but if you want to research further, then I would suggest the Global Investor Bookshop. You can get books in the library. If you wish to do that, the UK libraries do stock mostly trading books. You may have to wait a week or so, but they will come eventually. Okay, do I continuously look at the chart? No. I tend to review charts. I find the 30-minute charts are the most reliable, or the ones that give the best picture. And I tend to review the charts sort of periodically through the day, maybe every 30 minutes. It depends what's happening, it depends what's going on, whether I've got a trade on, whether I'm looking to get a trade on. But no, I certainly do not continue to look at the chart. I do have this pager, which I would recommend to you. It's quite expensive, £100 a month. It's not cheap, but it's very handy, as it does display a chart of FTSE, and it means I'm not tied to my office. I can walk around, go wherever I want to, and I still have a chart of FTSE, and of course with the PDA I can then trade. You mentioned selling high spikes. What to sell? It depends what's available. You want. I suppose spikes in a way do lend themselves to spread betting, because you have an obvious stop point. But if there are good binaries available, you might get a much better deal. The little video clip on the trade on the 11th of October on the Dow, and also in fact on the 8th of January on the Dow, is an example of how you can use spikes, or at least sell signals, with binaries to produce very attractive risk-reward ratios, as it were. 50 to 1, etc. How to recognise spikes whilst watching? Well, how many points up and down is a personal thing. I suppose I would say minimum of 10, maybe 20 is a better one, but it depends what you find useful. And does this move very quickly? Yeah, it does move very quickly sometimes. It's something that you need, again, by putting in the work, by watching them. You'll answer these questions yourself, which is more important really than listening to me answer them, because that's how you'll learn, and how you'll develop your own approaches by looking at the market, seeing what happens, and coming up with approaches that work for you. So yeah, I think that answers that one. There are 6 questions here. Why, when the markets go up and down, do they reverse so quickly the next day? They don't always, of course. I mean, but they do sometimes. I mean, markets do tend to go too far. This is their nature. The market is an emotional animal. People are trading under pressure. Markets also sell off. People panic. They sell at silly prices. So it's it's you'd expect markets to bounce back, but they don't always bounce back. I mean, if you take the decline on FTSE down to the 22nd of January low, I mean it was falling for quite some time before we saw a bounce back on the 22nd. But it's basically it's partly the emotions. It's another part of it is that as everybody sells the market, they have the potential to buy to close their position. And so every time somebody sells, the market has a more positive bias than it had before they sold. So once a turn comes, everybody's short, and they all need to rush for the exit to get out, to close their positions. So that's why it moves pretty quickly at key reversal points. But that's not every day. And the same goes. It's less obvious with highs, because highs are formed by greed. And as you'll realise, greed is not such a fast-acting emotion as fear. I mentioned tigers and pythons and things, but if a wild animal approaches you, you'll probably rush off. Sorry, I think my voice is about to give out. I think I'll probably cover that point now. Question 6, a bonus question. Can you reduce your bet price to minimum when it is 0-2? I'm not quite sure what this means. Can you reduce your bet? I presume we're talking about pounds per point. I mean, you can always, with IG, the price is now, minimum's going up to £1 a point. But you can certainly buy the bet at 2 when it's 0-2. You wouldn't want to sell it at 0. I've never tried to sell a bet at 0. I wouldn't recommend it. I suspect I'm missing the point, but perhaps whoever sent this in could elucidate what they're trying to get at. Now, with 32 minutes, we'll just do one of the 50 questions just to make a start on the 50 questions. Okay, the first question is actually a very good question. I didn't realise novice traders all make the same mistakes. It took me a while to realise this. We all tend to be very proud of our individuality, and it's one of the most interesting aspects of trading for me has been to realise that in fact we all do the same things. The markets have the same impact on all of us. I mean, I know this isn't really a question. I mean, a lot of these 50s aren't really questions. They're just comments I thought were perhaps interesting and useful. So I'm hoping that I can deal with all 50 in one final session. Whether I can remains to be seen. But yes, we do. We all make the same. We all behave in the same way, very very similar ways in market trading. And it's very interesting, in fact, that the successful traders behave actually quite similarly to the losing traders. There's not a great deal of difference in what they actually do. In fact, they do the same things at the same time. Often successful traders just trade a bit less, really, and losing traders just trade too much. And I suppose you could say that winning traders control their emotions more, are more consistent in what they do, and more experience, of course, which comes from trading for longer periods of time. Losing traders tend to be more erratic, but all traders it takes time to get to that point. I think buying yourself a lot because of the way of their nature. The fact that you have got limited risk is a huge help. But that's a good, I would say, an interesting observation to make at a fairly early stage. I obviously have no idea how long this individual was traded for, but it took me quite a few years to realise that. And in fact, it was working with other traders over a number of years that made me realise how similar everybody is in this context. I mean, the 55 steps in my book, The Way to Trade, is one that many people relate to. I mean, the actual sequence of steps can come slightly differently, but we all tend to go through the same sort of steps. So I shall say good night at this point, and I hope this session has been useful. And we now have 49 more questions to go through, which I shall try and do this week if I can. And as I say, I'll then be looking for more feedback from you so I can continue this process. Thank you for listening.